Hello, I think we're live. Welcome back, everyone. I hope you had a good lunch, as brief as it was, and you're ready to talk some more derivatives with us. Here I have Juliana on stage. Christina, are you joining us for the session?
No, I'm not actually, but you seem to
Sorry.
play around. So now I was
Here you are. You can hide if you want, or you can stay. But yeah, essentially, we're doing a nice little AMA with Juliana. Juliana's quite extensive experience in derivatives, in traditional derivatives. She's worked at UBS on the trading desks, and she has worked in wealth management and many different areas of traditional derivatives. And so she has a nice little slideshow that she'll show us and kind of go through the history of things and just kind of give you an insight into her life. Also, she's living in Brazil currently in Sao Paulo. So there's a lot of interesting tidbits of information she could give us that I think we haven't really touched upon, focusing more on decentralized derivatives. I'm really excited for this session. And yeah, I'll let Juliana give herself a little intro. You guys know who I am already. I think if you want another intro, ask me for it later. But without further ado, Juliana, you may begin.
Impressed, like how we started with 62 people. Then after lunch, they dropped to like 51, and now we're like 47, 48. So hold on, we're gonna have a lot of fun now because volatility can be painful, but we learn a lot from those experiences. And I think I wanted to give something like interactive, so I'm going to need your participation. Please bring all kinds of questions. My background started back in 2001 in derivatives, so I've seen quite a lot, and I would just like to share screen. Let me see if I can do this. But pretty much my story starts as a Brazilian back when inflation kicked in our country. And so this is pretty much my website today. I am a consultant, and I am, if you go to my LinkedIn, I'm doing a lot of development today. So today I'm a total dev. I am into mobile, and I use this framework from Google called Flutter, which builds for both Android and iOS. Back in 2018, when the hype of cryptocurrencies was going on, I decided to take this very seriously, and I had a master's degree that year from the University of Nicosia, which was one of the first ones in the world to give a technical background on blockchain. And I chose the path of the developers and programmers in my journey through the blockchain space. Today, I also am pretty much the voice of Ethereum Developers São Paulo. It's a meetup group in Brazil. We have around 300 members. And I'm also the summoner of the coolest downtown. So Christina is part of us. Rafaela, who also spoke. Then we have Rebecca, we have Tamlin, and all the most brilliant women in the blockchain space. So we have a DAO, a decentralized autonomous organization. And I'm also like entrepreneuring. I'm starting this journey, interested in topics such as like neuroeconomics, so why people make bad decisions when they invest, why women have this risk aversion, and also like why women are not investing as much as men or taking so much risk as they do. So women know for sure that they cannot lose money, so they don't risk as much. So we have to understand why this gap is happening. And my background started back in 2002 was the year I graduated. But in 2001, I was already an intern in the brokerage house in Brazil. So I was an equity analyst first, and then it became Brazilian futures trader. So we did a lot of FX and interest rates back in 2002, 3, 4. And then in 2006, I was invited to go to New York and work. Actually, the address was Wall Street number 100. So I worked for GFI Futures. It's a brokerage house internationally. And I traded over there swaptions, which are an option to enter an interest rate swap agreement in the future. So you have an option to decide something about the future date. So you can buy today an option to enter an October 2022 agreement that will settle in 2024, for example. So it's a very, very illiquid market, and it's an institutional product. It's not for the regular people. Then Lehman Brothers happened, so there's lots of interesting, peculiar stories about that time. And then I was invited by UBS to be part of their trading desk in the Bahamas. At the time, we had 5 people, where we ended up with 2 people. So that was also my migration from institutional investors to wealth management. And then 2014, UBS closed its branch in the Bahamas, and I was invited by another bank because I did not want to leave the Caribbean, so I was invited by Deltec to take the lead of their trading desk. So pretty much I answered to regulators in the US, in the Bahamas, in many European countries as well, because when you have clients from Colombia, from Greece, from Japan, you are also liable, and you have to respond to regulators. But this is how I kind of started. This is how the market actually looked like back in the day. So this was an open outcry. I added here, let me just mute this, but this was the scenario of the markets when I became like a junior trader, more or less. It was a market that was pretty much, you think it's a mess, but it's very organized, that right now everything that they say is being recorded on those phones. Every camera is recording even like where they're looking at, and their hand signals also have a purpose between who's buying and who's selling. That guy was selling. He was doing like this movement of like go, leave, sell. So I added this just for like illustrative purposes. This guy's buying. This guy for sure is buying. When they do this, they're buying. And they have to cry, to yell to the others. So pretty much that's the scenario when I joined. This market is also very liquid when you think that the interest rate and the currency are the most liquid ones. So what does liquidity actually mean? So I also brought like some nostalgia from the trading floor, which is like this, everything you see, it's underlined on this presentation, are links for you to click and read. But those are the stories about like when Chicago closed also its trading pits on July 2nd. So this is the story of like the end of the trading pit. And today everything is done electronically by buy and sell buttons, regardless of their colors. It's just with one click that you actually buy and sell. But there's a lot of routing of those orders, so they finally hit the exchange. This is Chicago Mercantile Exchange. When I was working in Wall Street at a derivatives brokerage house, we had a clear separation between Chicago and New York, NYMEX, so the New York Mercantile Exchange. Today, they're just one group. So the CME group got all together by specialization as well. They concentrated every derivative trading in Chicago. I also traded, I had the Series 3, which is a certificate you need to have to be, it's like a license in the US. So I could also trade like in the London Metal Exchange. So just for you to understand, this was the banking era back in 2006 and 7. This was when UBS had one of the biggest trading floors of the world in Stanford. So the size of, I think, like 2 soccer fields or something. But as you can notice, everything is electronically. So the need of calling the trading floor is not there anymore. So no, and there's like some stories about the trading floor in Stanford. There's also linked to the New York Times. And I would like to invite you also today to not be afraid and think that this is a very distant reality. This to me, it's like I'm super comfortable in walking around the floor like that. This doesn't look something crazy unusual to me, but pretty much you're very welcome to enter those exchanges. And I put here even DeFi Pulse, and you're going to know why in a second, but anybody can just go to Chicago in one click, cmegroup.com, and you're going to see where all the derivatives are actually trading and why. And we do deal the language of millions and billions. So pretty much I added here in the spreadsheet that I did for you, something that like people totally lose the sense of money. When we trade derivatives, we trade notional value. And that notional value can be like, I noticed that in New York when my minimum ticket was 200 million. And I used to think like 200 million is the smallest trade I could do. I would do trades of 4 billion and up. And
I think we lost the spreadsheet.
we did. Oh.
Yes, the screen share.
You cannot see my screen anymore?
Yeah, just try and bring it back if you can.
Okay, there you go. Let me also do something here. So it's going to look probably more visible. So I just added here. So don't be afraid of like, oh, I don't know exactly how many zeros is in 900 million and how many zeros are in the billion. So it's like
we still can't see the screen. Is it?
Okay, I'll put like a link for this later, which is a pity.
It's a shame.
It is. It is a real shame. Can you see the screen now? And thanks for letting me know.
No. Maybe refresh, like come out, come back in. We'll paste the link in the chat if there's a link to it.
Okay. Yeah, for some reason I was not
put the link in the chat and I can share it. I can just share my screen. Oh no, we're back.
We're back.
There you go.
Super. Right. So I was talking about the trading floor. I think you saw that. Could you see this?
Yes, we got here.
Okay. And then I added a link to the Chicago Mercantile.
This is where we stopped. Yes. This is it.
Are you seeing? Can you see my screen?
Perfect.
Okay, good. So I'm just telling people to not be afraid. Any contract as a derivative contract is nothing more a PDF file. And that agreement is a set in stone agreement. When you trade OTC, that PDF is a very important document that's signed by parties in the bank, so the legal director or the traders. Very few people can pick up the phone and do a trade and call the other bank. But in the futures market, this is set by the exchange, all the rules. When do a market expires? Or how much is it trading right now? How much margin are we gonna have? So if you go to Chicago, for example, you click on markets, you can pick any product. And I picked here for you like a net gas example. Okay, so from agricultural commodities, energy, FX derivatives, interest rate, metals, and the same can be done by the London Mercantiles Exchange, which is this website right here. So you also have like metals. For example, if you need to understand like from precious metals, how is gold traded, how much margin is it asking? So you have all the details here. So don't be afraid to explore those two exchanges. They are your best friends in terms of what are the current rules. So if we pick a market, and I'll pick like on purpose nat gas, because I know some of you do have years of experience on trading one, but let's say I don't know anything about nat gas. I'm going to pick not a random contract because you can easily get lost in this. So what's my first filter as a beginner or as a non-trader of nat gas? Of course, I remember that the code of nat gas when I traded back in 2007, it was NG. But people don't know that NG is the one. How do? I go by volume. If I check by volume, I check what is the one that has the most liquidity one. And this one matters a lot because then I pick the future that is giving me the most amount of trading liquidity, actually. And the same, I am not focusing too much the stock on the derivatives market, but this is my main radar. So I added here like a radar. DeFi Pulse is when I actually need to see on derivatives. I just go and filter by locked US dollars. And you can totally see that $756 million is completely different than $1 million. So where am I going to find liquidity right now? I hope Vega is going to be the passing synthetics shortly. But to reach this amount of volume, you need people participating, you need people trading, and you need a lot of money locked in those protocols. So this is just for you to know that there is a very good radar. This information is public, DeFi Pulse. I think it's maintained by Consensus or the Ethereum network, but this is where you can actually see where you're going to lock your crypto, okay? Because this matters a lot. If you don't have liquidity, you don't have a way out. And in derivatives, you really need to know. So here's like a spreadsheet that I did for you called Draft Derivatives. I hope you can see this. Can you?
Yes, we can.
So this is like this market that I was talking about. So here is Henry Hub Nat Gas Futures. What does this screen tells me? Contract unit, 10,000 million BTU. Does anybody know what this means? It's like Greek. Very good interactive session. We have 10,000 million British thermal units, which is something also called the multiplicator of the contract. So each one contract of nat gas trades 10,000 million BTUs. That's their main unit. Okay, 10 million BTUs. And then you can check BTUs. If you go to your AC, you're going to see how much they are trading. And then this is also information I got from last week, but I think it didn't change much. But this is like the trading hours. So on the expiration date, you actually have a minute to expire things. And then some specifics about the contract. But here is like minimum price fluctuation. So the minimum you can actually have a fluctuation of a price is $10. So every one tick higher or smaller, you're moving like from 50 to 60 or to 40. You don't trade 55 or 45. You cannot meet in the middle. So every implication matters to this point. And then here, when you go to volume, you can see the contracts by also liquidity. So usually here they do chronologically, but here is usually the most liquid one is usually the first or the second month. It's where you're gonna have your position. And then you have to roll this position for another month. And also I would like just back on the nat gas, I'd just like to show the fact that like how much one of these units actually mean. And then in pricing, it's like I just want to get quotes. So if I go here, quotes, and then let's say we're talking about the October contract, we have 2.26. Okay, so 2.26 is my price. You're obviously not seeing anything because I did it on purpose, so we're not going to do a lot of math, but it's just pretty much like multiplication. So if 2.26 is the last quote, 2.26.4, 2.26.4 is the last quote. So if 0.001 is equal to $10, meaning on their contract specifics, they say that like this is $10, then how much is 2.64? So pretty much you're gonna have like something I'm gonna just unhighlight like this. So $10 is 001, 20 is 002, and so on until we get to, excuse me, like my mouse is like not the best. So here is 2.26.4. So we're talking about $22,640 US per one contract of nat gas October 2020. Okay, so this is how much one contract is worth. Here it was like 2,901, but here we can just change to 22,640. All right, and this you can do for any derivatives. Soybeans or corn, they trade in 5,000 bushels. Coffee, you have packages of 60 kilos, and every derivative is going to have its own specifics. So if we have, if we need, here's a question for you. Do we actually need to have $22,640 to trade one contract of nat gas? Do we need to have all this amount of money?
I don't think so.
No. How much do you think we need?
It depends on the leverage, or how much you have to offer up.
How much money will leave your account?
Yeah, explain.
So here it is. Again, the exchange will give you all this information. Okay. On price quotation, you're also going to have something about margin. So here it's price limits, position limits. I'm just going to try to dig here in price limits. Nat gas, crude oil. I just want to go to Henry Hub nat gas. Reference price, dynamic. No, this is not like the most. I really lost the sense. When I had a Bloomberg terminal, I could see this. But pretty much, remember when we would have, where did I find this? I lost my futures options, contract unit 10,000. Margins, sorry, right in front of me, big button called margins. Here we are. So on margins, I have here, remember we were trading the October one, so product code. I'm looking for the 10th of 2020. This is when it's going to expire. I need a maintenance margin of $2,300. So $2,300 is actually how much margin I'm going to need to have to trade one contract of nat gas that is worth $22,000. So you understand that you don't need to have $22,000 in your account. You only need $2,300 actually, to be super specific. How much do I need to trade 5 contracts? That's easy math. That's 5 times this number, right? So you need 11,000. And 5 times, this is going to be equally to like more or less $100,000. So to trade $100,000 notional here, 100,000 to trade this number, you don't need to have this amount of money in your account. So going back, you're going to receive this spreadsheet as just an example of very easy math. So you know more or less, don't be afraid to do this math to any derivatives. And then to finalize, let me see if I need to press play. But I guess that was what I had. So I had curious stories about margin calls and all that. And this is an AMA, and I think I spoke already too much. But let me know if there's anything you're curious about.
I thought this was great. I think we have a couple minutes left, so we could open it up to the floor if anyone has any questions or wants to come on stage and ask. But otherwise, I will kick off some questions. So does anyone have any questions they'd like?
How many people here traded derivatives in the past? Can you raise hands?
Oh, we can do a poll.
Can we do a poll?
There we go. We've got a question. Do you use funding rates and spreads?
Funding rates and spreads. This is going to depend on how much margin the exchange asks. But to get to the exchange, you need to go to a brokerage house. The brokerage house might ask for more margin than the exchange asks. For example, at UBS Wealth Management, we needed to ask twice as much margin as Chicago would ask to the same product. So the funding, if you can explain better your question, Anik, but pretty much the rules are going to be set by the participants in the game. The exchanges have their rules. The bank where you have your account are going to set probably same or sometimes higher margins for you to trade those derivatives. And the spreads are also probably a reality for those that can access the exchange. Anybody can access the exchange by going to a brokerage house. If you go to a bank, they might give you a larger spread. So they might not say the bid is at 13 and the offer is at 15. They might say the best bid right now I have is at 10 and the best offer is at 20. So you have a 10, let's say, dollar gap between best bid and best offer. And then you as final client is forced to either accept or reject. You don't have too much of a call. You can tell your banker, hey, look, are you crazy? I see they're bidding at 13 in the exchange. I want to get paid 13 for this asset I'm trying to sell, right? So you pretty much always negotiate with the trader. It's on the other side of the line.
Okay, the poll is updating. We've got 31% of people have traded derivatives and 69% have not before.
Okay.
And question from Ashley, what's the strangest thing you've seen in your trading career? Wins, losses, market madness, etc.
Yes, this 31%, it's a very good start. For the 71%, I can say sometimes it costs $10 to trade a contract of derivative. And you saw it's around $2,000. So it's something to put in the to-do list of risk-taking for life. You should definitely try to get engaged with derivatives. Strangest things I've ever seen in my trading career. When I started, I can say we got a call from the exchange for a client that traded cattle, and it was expiration day. And they said, where can we deliver the cattle? Because when you do not sell and the contract expires, you have the obligation to deliver the commodity or derivative or metal or currency that is written on the contract. That's why you have a date and time to expire. So in case you don't, you might have a very, very unfortunate experience to pay insurance, to pay storage, and many other things. So I can say this one was quite unique. You never wait until expiration. You sell, you roll your position to the other month, or if you're buying, you just like roll the position to the other month. And also like Lehman Brothers was quite unusual as well. We got a call from Chicago, and I answered that phone call, and they said, you have 1 hour to close all the positions, or Chicago is going to close them for you. So that's what really happens. You get dismantled in seconds if you're on margin call. So they can be a very unfortunate, dangerous game if you're not ready for volatility. So you really need to be paying attention to margin, initial margin, and also if the price goes down, they go down very fast. And then you are going to be called to put more margin. And if you're not ready for that, you have to close at a very hefty loss.
Okay, I'm conscious of time, but we'll take a few more questions and just push the others back, maybe 5 minutes. Juliana, is there any question you want to pick of these that you prefer, or should I pick one?
Let me see. Global RFQs for request for quotes will be truly revolutionary. We're designing this within Vega, but won't be on V1. So if anybody's curious for request for quote, which the name says you request for a quote, Tamerlane is going to be the person to explain more about that. So don't be afraid to explore more on the topic. And I think it's super cool that they're doing that. Another important thing, like liquidity. Who generates buys and sell orders? They need to be incentivized, right? You just don't create a bid or an offer. So you need participants. And the more participants we have, the more like fair this market is going to be. The spreads are not going to be very large, meaning like people are buying at 13 and selling at 14. That's quite fair. Then I have the best buyer paying 5 and the best seller just wants to sell for 200. You don't have a market. You have days and days of no trading, no liquidity. So you need that in crypto.
Final question, I think. Do you see blockchain tech and crypto assets and its derivatives being accepted as a trading asset on the traditional financial markets anytime soon? Widely accepted as in not just ETFs?
Well, to be...
And you can be as honest as you want.
Okay, totally. To be in the traditional financial markets, you need to be under a regulatory framework that is different than what we do know today from the crypto space. So all those exchanges, they're audited to the nanosecond of an order. You can ask the order book anytime. The order book is not an illusion of a price. It is a real bank or a brokerage house that actually sent that bid. It's not a bot that just puts the order. Of course, there are bots from high frequency trading, but bots can get hit. And if they get hit, they have money in the account that they need to send to the liquidity chamber and get cleared. So in this sense, I think like blockchain and crypto does not have today the fact that you can be totally anonymous. It's also a problem on margins that they were discussing, like how do you collect the margin? If you can lock on the person's Ethereum MetaMask or in the wallet of a person, then you have the certainty that that person is going to pay and not go away. So I think like there's a lot of things that regulation is there to inspect and to make sure that participants are going to deposit, are going to, like, if they say it's going to close at 5 p.m., that's 5 p.m. If the market is avoiding inside information, is because every company, for example, in equities, every company has a specific date and time to release their balance sheets, their income statements to the public. So everybody knows the information at the same time. In crypto, you're sleeping and you wake up like Chinese are already trading. So it's not that you're going to wait until the market opens. The market never closes. So this is a tricky thing because the exchanges also need to take some time. What else?
Perfect. I think we'll wrap up there, but I really want to hear more from Juliana. So okay. She'll be hiding in the social lounge in the break between this session and the next session. And you can find her at, I think, table 1 or whatever table you want to go to, and they can come and ask you questions there. And you can continue the conversation. And yeah, this will be recorded. We'll share the slides. And I'd like to thank you so much for just sharing so much content, so much wealth of experience. So
my pleasure. Congrats to the Vega protocol for exploring a very difficult market to explain to the general public, a very highly regulated. And if you want to talk about correlation, volatility, super high speculative shocks, I've seen a lot in the currency of my own country, in other countries as well. So I think we can have fun in this side table. Let me pick a number, let's say table number 6. I'm going to be around there, so just try to join, and I hope to have a productive chat. Thank you.
Thank you, guys. Thank you so much, Juliana. Bye-bye.
Bye.